Political and financial turmoil, what effect is it having on our Central Virginia housing market? What is going on, party people? My name is Chris Elliott. I'm a local realtor, as you may already know. I am recording and editing, which means not editing this video myself. So if this looks a little unpolished, it's because I'm doing it and I don't know what I'm doing. But I want to shoot you guys a quick video today because I've had a bunch of clients, would-be clients, folks I've just talked to that have been wondering what the recent happenings, in the political and financial realms have had on our local real estate market. I've had a lot of people assume things that are going on with our local real estate market because of the financial and the political landscape. So I just wanted to offer some factoids, some data, some information. You can come to your own conclusions. I'm happy to field any questions, respond back to this email or social post or wherever you're seeing this. I welcome disagreement and debate as well. My only rule is you've got to bring, facts and data and not just feelings, opinions, and, whatever the spirit has told you. You've actually got to give me some raw data. But let's jump into this and break this down. Thank you to our good friends at Keeping Current Matters, a local Richmond company that reports on the national housing market and kind of the economic impact and everything. So thank you to those fine folks. But currently, 82.8% of U.S. mortgages have an interest rate of under 6%. There's a large amount of folks that don't have any mortgages on their property, but for those that do, a good chunk of those have an under 6% rate. And I can tell you, as a real estate professional, somebody that talks to folks all day, every day about housing, those folks that have those 3%, 4%, 5% mortgages absolutely covet them. And I have a feeling that folks are going to fight pretty hard to hold on to those mortgages. I know a big problem we're having in our industry is a lack of inventory, and that's due to a large part of the lock-in effect, where people have locked in these really cheap long-term mortgages, and they are very reluctant to give them up. So I have a feeling folks are going to hang on to those as long and as hard as they physically can. Americans are currently sitting on a massive amount of equity. So as you could see, roughly 30% of homes have 50% or more of equity. Roughly 40% of United States homes are free and clear. So these folks own their homes free and clear. So, as long as you can afford the insurance and the property taxes, which in our area are pretty nominal, those folks are unaffected, for the most part by any of the financial happenings because they just simply don't have a mortgage. So that is right there. So Americans are sitting on a massive amount of equity. Keep in mind, guys, too, as well, that a recession does not necessarily mean falling housing prices. So if we look at the last 6 recessions, in 4 of the last 6 recessions, housing prices have actually increased. 1991, we saw a very nominal decline in home prices of, let's call it 2%. Of course, everybody remembers 2008 because that one stung a good bit. But I think it's important to note that that was a recession that was brought about by the housing industry, right? That was a fundamental problem in the housing industry that caused us to go into a global recession. But that is certainly not the case with every recession, and has not been the case in, for the last 6 recessions. Also, important to note, a recession generally means falling mortgage rates. So everybody's been complaining about mortgage rates. Typically, when times get tough financially, interest rates drop to get the economy going again. So potentially we could see a drop in mortgage rates. I know we've already seen a slight drop in mortgage rates, and everybody that I talk to is hoping that they continue to go lower. So there's a good chance that we could see falling interest rates. Now, what are we actually seeing in our Central Virginia market? So this is the amount of new listings over the last 10 years. And this kind of looks like a EKG. But this is basically the amount of new properties that are hitting the market for sale. And as you could see, if you kind of obviously it ebbs and flows throughout the year, but as you can see, we are still sitting at historic lows or on the lower end of what we've seen over the last 10 years. as far as new listings hitting the market. So we're just in a market right now where we're not seeing as many transactions as we have historically seen, not only in Central Virginia, but all across the country, which is part of what has kept prices going up, is there's simply not enough homes hitting the market to meet the demand of current home buyers. We continue to see record low days on the market. So just this past month, the median days on market was 9 days, right? 10 years ago, we saw upwards of 40 days on the market. So we're in an environment where most homes are selling on average, on median, however you want to say that, in under 10 days. The median percentage of last list price, basically how much of their asking price are sellers getting. So we have been sitting at 100% for pretty much this whole year. As you can see, during the champagne and cocaine years of COVID, we jumped up to upwards of 5 and 4, 5, 6, 7% sometimes of a seller's asking price. But currently, home sellers are getting, on average, on median, 100% of their asking price. And this is the big one, month supply of inventory. So month supply of inventory is a metric that we track that essentially says that the rate at which homes are selling, if nothing new were to hit the market, how long would it take to sell out all the inventory in our market? By definition, anything below 6 months supply of inventory is considered a seller's market. As you can see, we've been in a seller's market for the last 10 years. We've been in an extreme seller's market. Anything under 2 months in my book is a extreme seller's market since 2020. But Metro Richmond is very much still in a seller's market by definition. It looks like we're about 1.4 months supply of inventory, at least this past month. And then, as you can see, median sales price has continued to rise. That kind of ebbs and flows throughout the year, and that's a different conversation for a different day. But as you can see, as of the last couple of months, the median home price has continued to rise. So I will tell you, as somebody that's in the trenches, on the streets, however you want to say it, we have not seen any effect in our local housing market. We are still cooking. We are still booming. Home prices are still climbing. We're still seeing multiple offers. We're still seeing homes sell quickly. Could that change at some point in the future? Sure. We're just simply not seeing it right now. And I would submit to you, if we go back to that month supply of inventory graphic, if I can do it, I don't know that I can. Yes, right here. It would take a huge market correction to even get to baseline neutral market, no less a buyer's market. So just given the fact that, in Metro Richmond, we simply don't have enough homes to supply the demand of folks that want to buy a home, I think that is going to, personal prediction, going to keep pressure on prices going up, and will keep our market chugging along. I think we may potentially see less transactions or remain at the lower level of transaction sales that we've been seeing over the last, call it 18 months. But are we going to see home prices fall in Central Virginia? Are we going to see this massive correction? I personally don't believe so, given the data that I'm seeing. So once again, if you have clarifying questions, throw it in the comments, shoot me a DM. If you want to troll me, by all means, I appreciate the engagement. But if you have a differing opinion, I would love to know what facts, what data that you are seeing, what charts, what trends, what numbers have led you to that conclusion. That, my friends, is all I have for you. And I hope you have a wonderful rest of your evening.